You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
Reality radio for a really great future. We're talking real money.
Hi, this is Tom Cock. You know, we all have a tendency to want everything to perform great all the time. Everything in our lives, right? Whether it's our sports team, whether it's our favorite public figure, or whether it's our portfolio. Yeah, I know you do because I get the calls. And right now, under fire is, of course, international stocks. Because, gee, wouldn't it make more sense to just be in that great electric car maker or the company that delivers all those packages to my house? Talking about Tesla and Amazon, instead of owning those underperforming international stocks, which have been a drag on my portfolio performance, frankly, for about the last 10 years. Had you just been in the S&P 500 for the last 10 years, you've done far better than being globally diversified. And we'll talk about the 10 years prior to that in just a moment. So what do we say to people that say half of your portfolios are invested internationally? Whoa, that's a big mistake. The U.S. far better place to put all of your money. Well, part one is you're wrong. The United States is rarely the best market to invest in. I count 2 times in the past 20 years, again, twice in the past 20 years, that the U.S. has been the best performing market. And the challenge has been trying to pick which other market has been better. Almost impossible to figure out which country is going to have a better return year by year. Number 2, going back over the long haul, the last 40 plus years. Here's what being half internationally invested has meant. Lower volatility, that is less ups and downs, and slightly better returns. Let me say that again. Less movement in your portfolio, which I know you love, and higher returns, which I know you love even more. Number 3, if you're moving money into stocks right now, would you prefer to be buying things that have gone up dramatically, or would you prefer to buy things that have underperformed? The answer should be underperformed, but your brain tells you, no, I want to put it all in those things that have done great. I want to run all the money in Amazon, which is up over 70% year to date, but we all know we should be buying low and selling high, not buying after things have already gone up. Number 3, really smart people, I'm talking Nobel Prize winners, say investing really should be about 3 things: diversify, diversify, diversify. Let me say that again. Diversify, diversify, diversify. Owning a widely diversified portfolio gives you protection against individual countries, markets, having a very tough time over a long period of time. Let me give you an example. Because the last 10 years, as I mentioned, it would have been way better to be in the Standard & Poor's 500 stocks instead of thousands. And there's always going to be times when a particular part of a market works better. But if you go back to the aughts, 2000 through 2009, would have been far better to be globally diversified, to have smaller companies, to have value companies. In fact, you made about 6% a year in an equity portfolio compared to the Standard & Poor's and 500 in that time. Actually about broke even for that same period of time. 6% a year or breaking even. You tell me which is better. We have no idea, by the way, what the next 10 years will hold, but I can tell you right now, I'm still believing in being globally diversified over the long haul because that has been the better approach. By the way, to learn the better approach, join us next Wednesday for our webinar. A lot of signups already. In a half an hour, Don and I are going to talk about building a correct portfolio using the new science, if you will, to build that retirement portfolio that will take care of you over the long haul. You can register at talkingrealmoney.com. 30 minutes of the class and then 30 minutes of questions and answers, which turns out to be a very popular thing as well. So join us for that. And thank you for joining me for this. I'm Tom Cock.
Talking Real Money.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only.
Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times.
Also, as much as you want it, no one can accurately, consistently predict the future.
So past performance doesn't tell you a darn thing about what the future will bring.
Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities.
Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor.
Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures.
Are we done now?